All right, hey, no, good to see you, man. This hearing of the Subcommittee of Commodities, Exchanges, Energy, and Credit, which is titled Review of Credit Conditions Report from the Farm Credit Administration, will now come to order. Good morning to everyone, and thank you for joining us at today's hearing to review credit conditions in rural America. This is a very, very important and critical hearing for us to examine the condition in rural America for credit and access to capital, and quite honestly, for the survival of so many of our smaller communities. We've held several hearings across multiple subcommittees that do speak to the economic landscape in rural America, and all have underscored the same key factors. One, depressed investment as a result of lower crop prices and reduced demand, land and input prices that haven't come down accordingly, a tight labor market, and, very significantly, limited access to capital and credit. And as we all know in our system, we are a credit-based economy. And this is one of the most significant points that we want to cover today in these areas. These factors all combine to point to one thing. For all the bluster we hear about the greatest economic recovery ever, the greatest economy ever, the facts show that for far too many Americans living in small, rural communities, their economic reality is very, very different. Whether the folks that live in these small communities, whether they're farmers, whether they're small business owners, they are not experiencing the same chance at success as many of their counterparts in the urban and suburban communities. So it is my hope that through Chairman Smith's update this morning, and we are certainly delighted to have a man of his knowledge and experience to really open this up so we can figure out how we can make sure that not only are we doing everything we know we can do now, but the things that we can do in the future as well to help. We'll be able to get a bigger and better picture of our rural economic trend lines so that we can continue a conversation on how best to help these individuals from our positions here in Congress. And specifically, I want to look today at the credit conditions facing all of our farmers, but our younger farmers as well, and smaller, beginning African American farmers. As everyone on this committee knows, I've taken a keen interest in making sure that we are combating the rising average age of farmers with all the tools we have available. And that's why, as I said, speaking with the chairman earlier this morning, when you combine all that we have said with the pressures on our farmers, The average age of our farmers now are right at 60 years of age and going up. This is our future. Agriculture is the single most important industry we have. We can do without everything else, but we cannot do without food or shelter or clothing. That's agriculture. And everyone knows that we must do all we can to ensure that there are young folks to take over when current farmers retire. It is a matter of national security and is, in my own opinion, it is a national crisis. And we're going to have to look at it within that landscape. The Farm Credit Administration is uniquely positioned to keep a finger on the pulse of the rural economy. The farm credit system that it oversees comprises nearly 70 local and regional lending entities that serve farmers and small businesses in our rural communities in all 50 states and also in Puerto Rico. Our FCA also oversees Fannie Mac, which serves as a nationwide provider of agricultural credit. This coverage and access means that FCA has the ability to see trends in the rural economy at their early stages. And it's worth noting that out of this is the first time we've had the chance to sit down with Chairman Smith since his appointment by President Trump in July, and our first hearing with Farm Credit since the passing of our dear friend and colleague, Dallas Tunsager. We continue to miss his voice and his counsel, and we look forward to continuing his advocacy, his strong advocacy for people living in small communities across our great country. So now, in consultation with the ranking member and the pursuit to Rule 11E, I want to make members of the subcommittee aware that other members of the full committee may join us here today. I now recognize my distinguished ranking member, Austin Scott, for his opening statement. Mr. Scott.
Good morning, and thank you to my friend Chairman Scott for holding today's hearing. Our committee has an obligation to proactively review the farm credit system to ensure its soundness. To help us do that today, we have brought representatives from the Farm Credit Administration, the independent agency tasked with regulating the farm credit institutions, to ensure that they fulfill their mission and stay within the scope of that mission. The importance of the farm credit system is largely unknown to those outside of the agricultural community. So I'm thankful that we have an opportunity today to highlight the system and its century-long mission of providing credit to agriculture in rural America during the good times and the bad, as well as the role of the Farm Credit Administration in ensuring the soundness of the system and its lending practices. Agriculture today is far more complex than it was 100 years ago. Providing credit to America's farmers and ranchers is a necessary and serious challenge for many lenders in the United States. That challenge is heightened with current struggles in the farm economy. Net farm income is at all-time lows, and farm debt is forecast to climb near an all-time high of $416 billion, up $100 billion in just the last 6 years. The value of farmers' land also stopped gaining value over that time. Add to that the concerns about increasing Chapter 12 farm bankruptcies, which have reached their highest level since 2011, and we have good cause for a renewed focus on farm lending and oversight of our farm credit system. In my home state of Georgia, we've had to deal with hurricanes, other natural disasters, and low prices that have added to farmers' financial difficulties. I strongly encourage the USDA to ensure that the WHIP Plus payments and state block grants are dispersed in a timely and efficient manner, and that farmers who have been impacted by our trading partners' poor behavior receive complete payments, MFP payments, for 2019. It is in times like these that our farmers and ranchers are most in need of reliable sources of credit at competitive rates. Thankfully, we have a network of commercial and community banks, USDA loan programs, and the farm credit system that each play a crucial role in providing that access. While we in Congress have generally outlined the authority by which the farm credit system may fulfill its ultimate mission of ensuring dependable sources of credit for agriculture in rural America, I realize that the authority is not necessarily delineated with bright line rules. Therefore, we largely rely on the Farm Credit Administration as the regulator to ensure that the system banks are doing their part to stay within the bounds of the Farm Credit Act. Today, we'll hear from Mr. Glenn Smith, CEO and Board Chairman of the Farm Credit Administration. Thank you, Mr. Smith, for being here today. I appreciate you taking time to appear before the community. Rural America is facing some unique, but I would say not unprecedented challenges, and we now more than ever are in need of an efficient and effective farm credit system. With that, Mr. Chairman, I yield the remainder.
Thank you very much, Ranking Member. The chair would request that other members submit their opening statements for the record so the witnesses may begin their testimony to ensure that there is ample time for questions. I would like to certainly welcome our witness, Farm Credit Administrator Chairman Glenn Smith. Thank you for being here. And Chairman Smith, as a native of Atlantic, Iowa, which is in our colleague Ms. Axney's district, I would like to yield to Ms. Axney to introduce you, our distinguished witness.
Thank you, Chairman Scott. It is my great pleasure to introduce Mr. Glenn Smith, Chairman and CEO of the Farm Credit Administration. Mr. Smith, of course, is a native of Atlantic, Iowa. I say from the best district in this country, Iowa's 3rd district. Glenn was raised on his family's farm in Atlantic and graduated from Iowa State University, an incredible agriculture college. Had a degree in agriculture business. And shortly after college, he moved back to his hometown with his wife to start farming and to develop his ag service business. Today, his family farm encompasses 2,000 acres devoted to corn, soybeans, and hay. He's also the founder and co-owner of Smith Land Service Company, an ag service company specializing in farm management, land appraisal, and farmland brokerage, which serves about 30 counties in Iowa. And Glenn has been serving on the board of the Farm Credit Administration since December 2017, and then was designated chairman and CEO of the Farm Credit Administration in July of this year. But with all of the great history and the wonderful honors that he's received, he's got an incredible wife, a lovely person, a great couple, and he's also cares a lot about rural Iowa. He's served on school boards and has made sure that his community was successful. So I'm so glad that you're here today. Glenn, thank you for joining us, and it's an honor to have you here with us.
Thank you, Ms. Axney. We will now proceed to hearing the testimony. Mr. Smith, Chairman Smith, you will have 5 minutes to present your testimony, and when 1 minute is left, the light will turn yellow, signaling it is time to close, and your time would be expiring. However, as chairman, I do have the opportunity to extend that as a personal because this is a very important hearing. I want you to really make sure, because you have critical information here. Our farmers, our rural communities need to hear from you, so I will be very considerate of points that you want to make. Please don't leave any points on the table. I will make sure you have the time. Thank you. Chairman, you may begin.
Well, first, thank you for that kind introduction, Congresswoman Axney, and it's really neat to be from the same district. Chairman Scott, Ranking Member Scott, members of the committee, it's a privilege to appear before you today. I'll be reporting to you on the operations of the Farm Credit Administration and its oversight as regulator of the Farm Credit System and Farmer Mac. And I have a written statement that I've submitted for the record. I'd like to introduce FCA staff with me here today. To my right, Chief Operating Officer Robert Coleman. To my far left, Director of Regulatory Policy David Grahn, and immediate left, General Counsel Charlie Rawls. And also behind me, I'd like to introduce my fellow board member, Jeff Hall, who's Chairman of the Farm Credit System Insurance Corporation, and my wife, Fuzanne. I became Chairman and CEO of FCA 4 months ago after the unexpected passing of former Chairman Dallas Tonsinger. His death was quite a shock to all of us at FCA, but his life dedication to agriculture and rural America will serve as a great inspiration for us for years to come. The Farm Credit System is the nation's oldest government-sponsored enterprise, GSE, established in 1916. It's a nationwide cooperative of 4 banks and 68 associations. It provides 41.4% of the nation's agriculture credit. My highest priority as chairman is to ensure the safety and soundness of the system. And I am pleased to report that the system is in fact safe and sound. Although we are very concerned and closely monitoring some weakening in credit quality, our institutions are well capitalized with solid current earnings. By structuring the system as a cooperative, Congress helped ensure that the system institutions would remain true to their mission. It later established provisions to protect the rights of system borrowers. As a regulator, we routinely examine institutions to ensure they comply with those provisions. Congress also established features to protect the system's safety and soundness, like joint and several liability among system banks and requirements to ensure adequate capital. To implement these requirements, we established minimum capital levels that each bank and each association must hold. The requirement to hold capital at both the bank level and the association level is particularly reassuring to investors during difficult economic times in agriculture. This is very important because, as you know, the system does not obtain its funds from depositors, but relies on the sale of its securities to those investors in the financial markets. Protecting the good reputation of the system credit and obligations is extremely important in maintaining interest rates as reasonable and as low as possible to the American farmer and rancher. And Congress continues to take measures to strengthen the system. And at this point, I'd like to thank the House, in particular this committee, for granting FCA several much-needed enforcement authorities in the last Farm Bill. It makes us that much more effective a regulator. This committee also has provided valuable guidance to our agency. Mr. Chairman, I had the privilege to meet with you about a month ago, and we had a good conversation with your relationship with our former chairman, Ken Spearman, and your mutual goals of improving the diversity and inclusion efforts at FCA. Mr. Spearman's legacy in those areas continues today, and I'm proud to report that for our support of diversity last year, the Partnership for Public Service ranked FCA second among all small agencies in the federal government. I'd like to conclude my remarks with one of my priorities at FCA, and it sounds like it parallels the chairman's comments as well. That's the young, beginning, and small farmers, what we call our YBS programs. My wife and I started out as beginning farmers in Iowa 37 years ago. The difficulty and challenges that existed for us then are no different today. The advancing age, as the chairman mentioned, of the American farmer and rancher is a concern of both Congress and us here at FCA. We need to do everything we can to encourage and help new entrants to agriculture. And our board this year has initiated efforts to strengthen the system's YBS program We look forward to reporting our progress in this area in years to come. This concludes my remarks, and I'm happy to answer your questions.
Thank you very much, Chairman Smith. Excuse me. And now I'd like to recognize Chairman Peterson, our distinguished Chairman of the Agriculture Committee, to give us an opening statement.
Well, I don't know if I need to make an opening statement. Could I ask one question, and then I'll turn it back to you?
Please do.
Okay. So what I'm interested in is I get a lot of concern from the biofuels industry, both ethanol and biodiesel, in terms of a bunch of plants have shut down, and and I've talked to some of them, but I guess I'd like your take on what you think the conditions of the industry are. There's concerns out there in the ethanol industry that what was promised in the RFS are not being, followed through. Biodiesel, we got this tax credit issue. So are you folks, I assume, following that pretty closely, and what do you think about where this thing is at and what needs to be done to get it back on track?
Thank you, Chairman. I'm following that extremely closely. Since 2 weeks ago, I was in an 18-wheeler delivering corn at an ethanol plant that borders one of our farms in western Iowa. I've seen firsthand what that plant has done for the rural community, for the jobs, for the infrastructure, and certainly to keep that ethanol industry viable and growing as promised is critical. The significant part of our corn crop goes into those ethanol plants now, and that market is there and needs to be maintained.
So what do you think about what's going on? Or do you think the administration revised their plan, and I'm still getting a lot of pushback from just about everybody in the ethanol industry about what they've done?
Yes.
Is that what you're hearing?
Yes, certainly.
So
certainly.
How much stress are these folks under? I've got some plants that suspended operations because they're losing money, and they just shut down, until this thing gets stabilized back into some kind of reasonable shape, So
yes.
What do you think, where's the future here? You got any crystal ball?
Crystal ball, no. But as far as feelings on the ethanol industry, Congress in this country called upon agriculture to serve a need, and that is a need for energy security. And agriculture responded to that need. The plant that borders one of our farms, I think the total cost was $140 million. Tremendous investment in that plant, and that's just a microscope of what's happened in the industry. Agriculture has responded to that need and to Congress's desire, and it's only fair that they return the favor to make sure that industry is maintained at a profitable level.
Do you have any plants that are in arrears, default or close to default that you're aware of, that you guys are financing? I mean, you financed a lot of these.
We do finance. It is within our authority to finance ethanol plants. It is a small part of our portfolio, and to my knowledge, I'll defer to our Chief Operating Officer, but to my knowledge, we currently do not have any loans that are in default in that area. But certainly we're a player in that market.
That's good to hear. I hope it continues to be that way.
I hope so too.
Thank you very much for being here and your testimony and for your leadership. Farm Credit is doing a great job out there, and keep it up.
We will. We will, sir.
Yield back, Mr. Chairman.
Thank you very much. I'd like to open up with questions and then recognize our ranking member. I first of all would like to hear from you on what do you feel that we here in Congress can do or should be doing to help increase the the capital opportunities. And if you could just explain why, I know we have farm credit in my part of the country, we call it Ag South, and they're really the lifeline. And so I'm trying to figure out what we here in Congress can do. What types of legislation should we be putting forward to address this issue of being able to increase the capitalization of our farmers?
Well, I think, Chairman, if I look ahead, my number one concern is profitability in agriculture. And I think we'd all agree, the agricultural table, that restoring our markets would be critical to looking at a long-term solution to bringing us back to profitability. We've received MFP payments, short-term payments, which have helped shore up short-term deficits. It's been welcome. Long-term, though, we need those markets back. We need to depend on those markets. And I know what's immediately in front of us. You asked what Congress can do. We've got some trade issues out there right now. USMCA in front of us, possible bilateral with Japan. I think passage as soon as possible on those two issues would build a strong case and build a good situation for us.
Could you repeat that again?
I would say the two big issues of trade that appears to be in front of agriculture right now is USMCA and a possible bilateral with Japan. And swift passage of those, I believe, would certainly assist us in our negotiations with China. The more allies we can bring into this whole trade negotiation, this global trade negotiations, the stronger our position is. Certainly, I would hope that's a goal of Congress.
Okay, very good. You're saying quick passage of UMCA would
Yes,
be one of the things.
Would be wonderful, sir.
Now, I want to ask you, because we've had a series of suicides
Yes.
with our farmers.
Yes.
And from the information that I've been able to get so far, it's because they're losing their farms.
Mm-hmm.
Do you have any insight on what how does this proceed? I'm trying to find out where we could intercede in this chain to try to prevent this drastic ending. Is there some kind of function we can do here within our agriculture department that we can communicate out so people will have a helpline that we could get something to them if there's some pattern that they're having this difficulty? We got to stop this suicide, and it's because they're losing them farms. What can we do?
Well, FCA and the Farm Credit System needs to be an empathetic lender. And I think in a lot of cases that loan officer, that lender is in the front line of recognizing potential problems that could lead to, as you say, the suicides. And of course, we started farming in the early 80s. We had a lot of friends who lost their farms, and we saw firsthand a farm isn't just a job. Okay, your whole identity is in that piece of land, and I saw firsthand what that'll do to the psyche of that father or their son or whoever that loses it. I know some of your representatives today have been engaging in potential legislation that would assist in looking at this issue. I know my time's about up, but I know the Farm Credit Council has also contributed to grants to educate mental health providers on the challenges in agriculture.
But do you think that if we established a help line here within the agriculture department and get it disseminated out, that could be a help?
I think anything that could be done would be of help, and anything that FCA is regulator of the system in the way of guidelines to the system. If we could be of assistance, we'd like to be part of that conversation.
Right. Thank you, Chairman Smith. I yield 5 minutes to our distinguished ranking member, Mr. Austin Scott.
Thank you, Chairman Scott. Gentlemen, thank you for being here. And I represent the 8th District of Georgia, 24 counties. My family has farmed through that area for many generations. I suppose my generation is the first of the family that doesn't have anybody farming today, and that's one of my concerns, is that the risk of being in agriculture today has gone up, the profitability has gone down, and many people who have access to land and equipment are simply choosing a different way to make a living, I would say. So we as a committee, as we write the next farm bill, I think we've got to find a way to, while we can never eliminate all of the risk of being involved in agriculture, we certainly need to find a way to help reduce the risk, to make it a better investment for people who are from the farm to stay on the farm. So we have had a downturn in farm income for the last several years. I get phone calls from people who I know are exceptionally good farmers who have, while they've called in the past, it has not been to express their concern about the future. And I have serious concerns, especially for my area, with cotton trading where it is, and if cotton futures come the mid-February of December are in the 60 to 62 cent range, what that does to a tremendous amount of industry, not just the cotton grower, but the ginners and the trucking industry and everybody else that revolves around that. And so I agree with you, the trade agreements are important, and the sooner they get done, the more likely, the faster those crop prices will stabilize, and that has an important function in our insurance system. So my question for you specifically, we've talked about capitalization. What steps have you taken under the authorization of this committee to keep the farm credit system properly capitalized and diversified for the foreseeable future?
Okay. Thank you. As far as capital, the system currently is well poised to be able to deal with a struggling ag economy. Several years ago, new requirements for capital, new higher requirements of capital were instituted, and I'm glad to report that on the average, associations are running considerably above what the minimum capital requirements are. So that's a starting point to be able to weather some tougher times. Okay. Strong capital, I'd equate to a savings account. It may not be as efficient use from a return standpoint of capital, but it's there in case you need it. And keep in mind, we're cooperative, and so the decision on capital levels is decided largely on the local level. Local directors, and many of those, most of them are farmers and ag businessmen. And so they believe in keeping that safetiness. So capital, and our emphasis on capital, I think is a strong indication of the long-term viability of the system.
Let me do this. I've got 1 minute left, and I assume we can come back for more questions. But the four of you up there, the issues that you worry about the most, from the standpoint not just of the farm credit system, but the agriculture industry as a whole and rural America as a whole, would each of you simply give us the one thing that you worry about the most in the 40 seconds that I've got left. Mr. Coleman, we'll start with you, and then we'll go down that way.
Thank you. Trade and the policies for agricultural products, as the chairman mentioned.
Mr. Smith?
Fragile land values.
Mr. Rawls?
I wouldn't have anything to add other than what's been said, trade and,
I can't hear you. I'm sorry.
sorry. I wouldn't have anything to add. I think trade is the most significant thing right now.
Sir?
Interest rates.
Interest rates.
Interest rates. Yes.
The fact that they are as low as they are?
Yeah, I know, the fact that they could go up. The fact that one of the things I think is helping right now in the ag community is the fact that, unlike in other periods when we've had difficulty in the ag sector, our interest rates as a whole are generally very low. What I'm concerned about is if that were to change.
Gentlemen, thank you for your time, and I look forward to a second round of questions if we have time.
Yes, we certainly will. And now I'd like to recognize the distinguished Congresswoman from Iowa, Ms. Axney. 5 minutes.
Thank you, Chairman and Ranking Member, and thank you for holding this subcommittee. And of course, to Mr. Smith, again, it was an honor to introduce you, and I appreciate the great work you've done. We've had plenty of conversations, and I thank you for the conversation we had about holding capital to make sure that we could help farmers in need. I appreciate that. I'm glad you're here today to inform us. You know as well as I do it's been a really tough year, not just in Iowa, but farmers across the Midwest and the country. With low commodity prices, of course, the trade war that was just mentioned, we've harmed our export markets, devastating weather and flooding has occurred, and recently the propane shortage that's preventing farmers in Iowa from drying their harvest. So I've heard it time and time again. I visit every county every month, all 16. Whether I'm there or sitting in my office in Des Moines, folks are coming and say they just don't know if they're going to be able to hold out much longer. So I have serious concerns about the debt that we're seeing. Farm debt is projected to hit $416 billion this year. Unfortunately, the $19 billion of farm debt that Iowans have is the highest in the nation. And this level of debt absolutely has consequences. The Farm Bureau reports that farm bankruptcies rose 24% compared to a year ago, and a recent study from Iowa State University classifies 44% of Iowa farms as financially vulnerable. And I'm really grateful that you're here. I'm glad for the good work that you do to make sure that the farm credit system is safe and sound. However, you noted in your testimony that the farmers who are at the most risk are farmers who are dealing with major crop losses, and especially corn and soybean farmers like yourself and other Iowans. Those are my constituents, of course, and I'm concerned about the stress they're facing. So a little clarification. In your written testimony, Mr. Smith, you stated that the FCA encourages system lenders to work with borrowers to help navigate current financial conditions without jeopardizing long-term viability of borrower or the system institution. And I think identifying and working with farmers that are financially stressed is critically important, and I'm glad that the FCA is encouraging that. Can you describe to us, though, what that assistance looks like? I'd like a little more detail.
Thank you, Congressman Axney. The actual loan decisions and the risk that they're assuming is up to the individual associations. At FCA, we can offer guidance, but the actual decision is up to the associations. But you'll recall when there are natural disasters like the flooding, and I think we met for the first time last May to talk about the flooding that was the western part of your district and how catastrophic that was to farmers in that area. No different from wildfires, hurricanes, other natural disasters that we've had in other areas of the country. And what we can do is, through guidelines, encourage those associations. And we have, as the regulator, we have a lot of influence. We can encourage those regulators to be proactive in working with those farmers to come up with a plan and for the best possible solution. You've heard of foreclosures being up percentage-wise. And percentages, the numbers aren't alarming, but the percentage increases are. foreclosure should be a last resort. I mean, it's just a tremendously trying, terrible thing for a rural family to go through. And so by exerting our influence through these guidelines, hopefully those associations will hang in there and maybe step up efforts, outreach, finance efforts to those troubled families, but mainly encourage the associations to be proactive in working out a plan.
Okay. If you have an opportunity to provide us any more information down the road, what those associations might be doing specifically, I'd really appreciate that.
Certainly, certainly.
Next, I just want to ask you real quick. I recently read an article in the Wall Street Journal that outlined how some farmers in the Midwest are turning to alternative lenders due to mounting financial stress. And one such lender has noted their volume has grown over 40% in the last 3 years. While in some cases these loans can provide what is essential lifelines, I'm concerned that these farmers are borrowing at unsustainable high interest rates. And based on your knowledge and expertise, or anyone here, have you seen an increase in farmers going outside of traditional banks or the FCS for loans?
Yes, unfortunately we have. And I describe them as maybe payday lenders because of some of the interest rates that have been charged, over half of prevailing rates. Right now, I feel we've got a good balance. The system is about, at 41%, I think is less than 1%, the same market share as what the commercial banks are. So we've got good alternatives out there between commercial banks and the system. FSA comes in there maybe at a lower level. FSA should be the lender of last resort. Unfortunately, isn't always, and these operators are looking to alternative sources because they have no choice. It's deeply concerning. It's deeply concerning the security interests that these alternative lenders are taking that might have an impact on long-term lending that the banks and the system might be holding as well. So yes, in answer to your question, we're seeing an increase, and it is a concern.
Thank you.
Yeah, but I will come back to that. And now I'd like to recognize the distinguished Congressman from Arkansas, Mr. Crawford.
Thank you, Mr. Scott. Mr. Smith, continuing on that, you used the term payday lenders. Who are some of those lenders that you referenced?
Specifically, I could not, I cannot name them right off the top of my list. I've read some top of my head, I've read some articles about them. Seen some prospectus. We could possibly provide you some information at a later point, Mr. Crawford, on that.
That'd be appreciated. You and I have had a chance to visit offline and had a good conversation about a topic that Chairman Scott referenced. Obviously, that is the young beginning farmers and the programs available to them. Farm Credit Lending Association is supposed to have, each one of them is supposed to have a program in place focused on serving the needs of young beginning and small farmers. What does FCA do to ensure that each institution has these programs and that they're actively serving these market segments?
Well, you're correct in that FCA and the Farm Act, the mission does provide that each association must have a YBS program. And they report annually to FCA, and we in turn report to Congress directly on those numbers. However, I think since I came to FCA and our board has decided we needed to step up the efforts on that, not only to improve the report writing, which needs to be improved, but also encourage more uniformity, sharing of best practices, and the third factor of the program is examination for effectiveness. Mm-hmm. Of course, our first step is to get the numbers right, and we're working on that with a new rulemaking that we just instituted here this past year.
So, to Chairman Scott's point, the trajectory is going the wrong direction with regard to an aging farm population. These operators are are getting older instead of younger. And so I don't know that it's necessarily enough. I appreciate the fact that you guys are sort of redoubling your efforts here and stepping that up. That's appreciated. I'm wondering if you can speak to some of the other things that we might be able to do, because it's not just about credit. In fact, the barrier to entry for young farmers in many cases is the basic element of land. Mm-hmm. And how do you bridge that gap, number one? Number two, are we working with other institutions in the ag world to create mentorships and guidance for young farmers so they can get the best management practices and be sort of guided along, you know, because going in and asking for a loan can be a pretty daunting task in and of itself for something as big as an ag enterprise, even a small-scale ag enterprise. Can you comment on that?
Yes. What you'd mentioned about collaboration with other programs, I had a trip to North Dakota, tri-state conference they had with Mandan, North Dakota, and Ag Country. It'll be a year and a couple weeks. I was a junior member of the board, so I drew the short straw to go to North Dakota in December. But it was a great conference, and I enjoyed one of the things that struck me. And when I take these trips, I ask not to see the big, shiny, multi-generation operations. I want to see the young and beginning farmers out there, the ones that you're truly helping as entry-level farmers. It may not be quite as shiny, might not be quite as impressive, might not drive new trucks, but that's the future of agriculture, and that's the future of the system, quite frankly. One thing that struck me that those associations were doing very well is collaborating the information that FSA, Farm Credit, and state agencies to help promote beginning farmers. Mm-hmm. There's a lot of programs out there, but there's not a lot of education on how to combine those programs.
Let me add this in the remaining time that I have. I think I'd be remiss if we're talking about young and beginning farmers if we didn't talk about student loan debt and what we're doing to address that. You know, broadly, I think it's a topic of discussion. What can we do in the ag industry to sort of to take a different perspective on how we address student loan debt and how we can quickly liquidate student loan debt and get our young people in a more productive role on the farm as opposed to continuing to carry student loan debt for 10, 15, 20 years?
I guess my best answer to that question, Mr. Crawford, is I'm not sure. It's as it stands, it's a burden. It's a burden to the ability of that young operator to repay those loans. It's a consideration over making long-term commitments, which land, livestock, and machinery can be. I guess I'm drawing a blank there on what the system can.
Well, and that really points to a problem, quite frankly, that we're all having. Is I think we're all kind of drawing blanks on what do we do to address what I think is going to be potentially the next financial bubble that this country faces, and that's certainly true. As you mentioned, the rate of defaults. This is going to be a contributing factor as we try to bring young people into agriculture and we don't adequately address that underlying debt problem. So I thank you for your time and I look forward to working with you on those issues.
Thank you.
And now I'd like to recognize a distinguished member of Congress, Ms. Craig from Minnesota, who is doing great work in agriculture and helping out farmers. Ms. Craig.
Thank you so much, Mr. Chairman. And Mr. Smith, thank you for being here. It was great to meet you last week. It's always a pleasure to talk about the important work of the farm credit system as farm country continues to struggle through the trade war, a tough harvest, and record low farm incomes. The farm credit system is more important now than many of the previous years. However, farm credit also plays an important role in building the infrastructure that improves rural quality of life. And so that's what I'd like to ask you here about this morning. Time and again, I hear from farmers about the need for accessible health care. Many of my farmers work off farm for subpar health insurance and drive long distances to see a doctor. In parallel, we continue to see a decline in the health infrastructure of our rural communities, jeopardizing access when families need it most. There's a need for healthcare facilities, hospitals, emergency services, and nursing homes across rural America. In my district, Compeer Farm Credit has joined with local banks, credit unions, and USDA to finance these facilities. We need more of these partnerships. What is FCA doing to encourage farm credit and other lenders to partner in support of these vital projects?
Thank you. And what you're relaying to, you're describing is our authority on mission-related investment. And we feel it's a very important component of our service to rural America. And certainly we've been active in your district, in your state, nursing homes, healthcare facilities. And so it makes a lot of sense for the system. It makes a lot of sense for rural areas because there's a huge need for capital. And with the Farm Credit System, we're tapping into that global financial capital, and doesn't it make sense to channel that? We want to make sure that those investments are sound because it represents capital. That capital has to have quality, quantity as well as quality from the safety and soundness standpoint. But certainly we're quite proud, and our former chairman was an undersecretary for rural development. He was a strong advocate for our mission-related investments, and I have been to Minnesota and visited some of those facilities, and I believe in them. We were actually able to buy groceries and pay our light bill in the 80s because my wife had a job in that local county hospital. So keeping those hospitals, keeping those schools, keeping those ag businesses viable is critical to our rural communities.
Well, that's really great to hear. I hope you visited Minnesota in the summer. Unlike North Dakota. So I understand that as the regulator, you have an obligation to make sure that institutions are being used appropriately. I'd like to emphasize to this committee that planning large healthcare infrastructure projects sometimes means the government needs to get out of the way and provide some regulatory certainty as well, so these projects can continue without delay. So thank you so much for being here. And Mr. Chairman, I yield back.
Thank you very much. And now we'll recognize Mr. Rouser from North Carolina.
Thank you, Mr. Chairman.
Distinguished colleague.
I appreciate Mr. Smith and your colleagues being here today. In fact, as I look over the dais here, I see a couple of former colleagues from a previous life. And Charlie, great to see you, and David, great to see you again. As I look at both of you, I have flashbacks to 20 years ago and 15 years ago, respectively, to our various endeavors we were a part of, and it's hard to believe time moves that fast. Speaking of time moving fast, so I have a lot of farmers back home in my district. Obviously, it's a very difficult time, a lot of struggles. And oftentimes they'll mention, you know, this is just as bad as it was in the 1980s. And so I'd like for you to comment briefly, if you can, on the strength of the farm credit system now versus the situation in the 1980s. Obviously, interest rates was part of it, but there's other aspects of it too.
Certainly. Number one, and I guess I'm going to continue to repeat myself because it is very important. The quantity and quality of our capital is so important for the continuing viability and strength of the system, being able to serve borrowers in troubling times. So I'd say that's probably the number one factor, probably was not there in the 80s. We had an interesting discussion with senior staff the other day, and one of I think maybe it was you, David, had said, well, this isn't the 80s. And I said, which part of the 80s? Because when we got to the mid-80s and the late 80s, we were in a crisis situation. But I made the comment that I think we're at a level that's comparable to the early 80s. Decreasing farm incomes, decreasing margins, eroding current ratios. And at that time in the Midwest, we'd lost 15 to 20% of our land values. Guess what? Today we've lost 15 to 20% of our land values in the Midwest. So there's a lot of, and the late 70s and early 80s were typified by trade wars, right? At that time, it was the Soviet Union with the grain embargo. So I think we've learned from the 80s. A lot of us have been there, been around. We're getting fewer and fewer, but we've learned some lessons there. And again, getting back to the capital and conservative attitudes in our regulatory posture is extremely important. But back to your original question, where do you think, how does it compare to the 80s? There's some real similarities with the late 70s, early 80s, without the high interest rates, but we have high land values, we've got high machinery values, we've got high principal payments that's paid back with after-tax dollars.
Yeah, if I can interject, one of the observations that I've had is whenever the general economy is doing well, the ag economy usually is suffering. And usually when the agriculture economy is doing well, the general economy is suffering. A lot of that has to do with strength of the dollar, but there are other factors as well, obviously. Yeah. So if you look at the fundamentals of the economy today, I think this economy remains pretty strong. I'm not talking about the ag economy, I'm talking about the general economy.
Right.
So here's my question. 5 years from now, if farm income remains at its current level, what type of financial situation are we in? How does your balance sheet look then? And of course, the follow-up to that is, what do we need to be doing now to help shore these things up? Obviously, trade's a big component, but I'd like to throw that out.
So back to that crystal ball, right? But as the regulator, we do need to look forward, and we need to look at scenarios of in our risk modeling. What if interest rates were higher 5 years from now? How would that affect the overall condition of the system? And we're safe and sound today, but what happens if credit continues to erode? I think the answer to that is we continue to have conservative attitudes towards lending. I think in some respects we are making progress today in that we are having pay down of a lot of those maybe not great decisions that was made back in good times. And I think in some cases we're making a little progress there, and if that was to continue, maybe that'd help mitigate that unknown 5 years down the road. As far as crystal ball and knowing where we're at, I'm sorry, I'm not there. I'm an optimist. We own land, and we own land not for one generation. We own land for many generations, and you learn to get by in the tough times, so you can prosper in the good times. And I'd say that characterize ag in general.
Mr. Chairman, I yield back. My time has expired.
Thank you very much. And now I'll recognize for 5 minutes the distinguished Congress lady from the Virgin Islands, Ms. Plaskett.
Thank you very much, Mr. Chairman, and thank you, sir, for coming to speak with us and share the information. I was really grateful for the time that you and your staff came to my office. I thought it was very informative, and I'm grateful for the support that you've given to farmers, particularly young farmers and those who have in some ways been forgotten. I wanted to ask you about excuse me, something that I believe is very important to farming, to rural areas, and that's high-speed internet. Do you see an impact on the lack of affordable and reliable internet, both on your staff working in the field, as well as the ability of rural America to attract younger generations to live and work for American agriculture?
It's critical. Broadband is critical for rural areas to maintain competitiveness. There was an article in the Washington Post, I think just this past weekend, about how isolated rural areas that got into medical scenarios, a lot of times in a trauma emergency ward, that they didn't have access to the expertise needed to save lives. And via their internet, via high-speed internet, they were able to communicate with some of the better medical minds in the country. That's just one example. I look at our schools, and the ability of our schools to stay competitive in rural areas is being critical also to broadband development, as well as our businesses and developing those cottage industries that are very, very able to survive in rural areas. I was in Colorado a month ago,
and sampled a YBS operation that was producing bison sausage and specialty meats, and they lived in the country. I don't know, it was about 60 miles from Fort Collins, and all their marketing, everything was via the internet.
Wow.
Extremely valuable to that little cottage business that I think was going to grow.
Yeah,
Sausage was pretty
I think
good.
also about precision farming in some areas.
Yes, yes.
How important that's going to be for them, and the connectivity that these farmers need to be able, the great apps that are available for them to support their agriculture and the marketing, as well as just record keeping.
Yes, yes, it is. It is. And in our operation in western Iowa, fortunately, we have access to internet that runs a lot of our GPS equipment, but our GPS equipment allows us to precision apply fertilizer, exactly what we need. So we've got the economies available to that. It enables us to change our population with our seed, to optimize each acre of corn. It allows us to see the areas that are productive and areas that aren't. So that access to broadband to enhance those technological capabilities that we're quite fortunate to have out there in ag, and key to survivability is very important.
Sure. I wanted to talk about a new area, the Farm Bill. Excuse me, we've done some work, and now there are proposed rules on hemp. And I wanted to know, are there any challenges or restrictions that you have in lending to producers of hemp?
Well, like it seems like most of the country, we're excited about the potential for a new crop.
Okay.
Because when I was a child in Iowa, soybeans was a new miracle crop.
You're dating yourself, sir.
Yes, ma'am, I am. There are challenges that go along with new crop. So far as FCAs, from our standpoint, we've put out guidelines that roughly parallel USDA's. As far as the actual loan decisions, it's up to the individual associations, and I know a lot of them are looking into it. The only cautionary statement, probably number one, is make sure there's a market. And we talked about value-added facilities and how important it is to develop those so there is a market for it. And possibly that can be a role that the system can fill. But just like any new crop, there's inherent risks with it. But as far as encouraging compliance with USDA and what USDA has put out for guidelines, we closely parallel that.
Okay, and one last thing. In the Farm Credit Act, it calls for 10 or more producers to form a lending association that's certified. What does that mean for rural areas that cannot meet the demand for having 10 or more producers under Section 20-B1?
I'm sorry, I didn't quite get the question again.
So under the Farm Credit Act of 1971, Title II, Section 2.0B1, it calls for 10 or more producers to form a lending association that's certified. What if in certain rural areas they can't meet the demand of 10 or more?
I'm not personally familiar with that.
Does someone in your staff?
Can I defer that
Sure,
to our
please.
General Counsel, please?
Well, I can comment on it just briefly. There is the provision in the Farm Credit Act, as you said, for producers to get together to form a lending institution that the Farm Credit Administration would then charter to operate. Honestly, that authority has not been utilized in many, many years. And I suppose part of that is due to the fact that the country is pretty well covered through the existing farm credit system and chartered institutions. But the provision is in the law and is available if farmers wish to get together and have capital to try to charter an institution.
Great, thank you. I yield back. Thank you for your indulgence, Mr. Chairman.
Yes, thank you, Ms. Fawcett. Now, I'd like to recognize for 5 minutes our distinguished congressman from Kansas, Mr. Marshall.
Thank you, Mr. Chairman, and welcome, Mr. Smith. I want to talk about input costs for a second. And I'm sure that that's something you all are looking at when you're speaking to farmers and their loans. When I go out, and I've spoken to hundreds, probably thousands of farmers, one of the first things they talk to me as a line item is the cost of health care. And I'm just wondering how much health care, the cost of health care is impacting some of your lenders, some of your folks you're lending money to. And what I see, Kansas Farm Bureau is rolling out an association health plan. Land O'Lakes is rolling out an association health plan, goes across state lines, which I sure am hopeful will start impacting that. Anything else going across the nation, other people trying to do it? And go back to the original question, just the impact of health care on producers today.
Well, certainly what you're hearing and what we're seeing, it's a major, major impact on an average farm family's budget. And many times it almost forces one of the family members to work off farm to support that. Certainly our family had the advantage of that, of getting health care. As far as any solution, I know that the aspect of deductibility would be helpful. You mentioned input costs, and I know right now, currently some operations can allow a deductibility if they have an LLC or corporation or some other legal form, but that I don't think that's probably available to individuals. But certainly, deductibility would be a help in offsetting those healthcare costs. But major item out of that farm budget, and a major hurdle.
Okay. Talk about other input costs. I was looking at some of the information supplied to us, and farm income is down. The other input costs, what have they done over the past 5 or 10 years? Fertilizer, seed, the cost of a tractor, the cost of a combine, what do those look like, and how are they impacting your portfolio?
Generally, fertilizer costs, one of your primary costs, tends to be seasonal, depending on supplies at the time. Right now, you're hearing about propane shortage, and that potentially could affect anhydrous ammonia prices here next spring, which would be significant as a significant input, as you know, for corn. I think operators have become a little more astute at defensive buying, meaning when times are good. We had 10 years of unprecedented prices and profitability, and it seemed like the more you spent, the more you made. Not so much today, right? I think you're seeing them price competitively among the seed corn companies. I've seen seed companies get much more competitive in the last several years. And certainly that astute farm operator is out there taking advantage of all the volumes, of all the combination, everything he can to keep those input costs. The trajectory is higher, particularly machinery input. If you'd price the cost of a new tractor.
Excuse me, could you get us some type of a graph on what the overall big picture of those input prices, what costs look like for the farmer over the past 20 years?
Sure can.
I think it's gone up significantly.
Yes.
Certainly the price of tractors never came down when the price of wheat went down, as near as I can tell. Lastly, let's go back to Chairman Peterson's comments about the biofuels industry a little bit.
Yes.
One of the things I hear over and over from the biofuels industry is, and for any business for that matter, is a problem when there's uncertainty.
Yes.
And the uncertainty that I'm specifically talking about is whether you like biofuels or not, the mandate was for 15 million gallons of ethanol to be blended, and for the last 2 years we've not done that. What does that uncertainty impact? How does that uncertainty impact ethanol plants or biofuel plants?
Well, that uncertainty means in looking at your budget for next year might make the difference between profitability and not. When you don't have that market there for ethanol, as was originally mandated by Congress, you can take many cents off that price that bushel of corn sells for. So certainly I think that's what the ag industry is looking for, is some degree of certainty that ethanol demand is going to be there year after year.
Okay. All right, thank you, and I yield back.
Thank you very much. And now, I'd like to recognize for 5 minutes our distinguished Congressman from Florida, Mr. Nunn.
Thank you very much, Chairman Scott. Chairman Smith, I represent the 2nd Congressional District of Florida. That's the Panhandle and kind of over into this north-central portion of the state. Very, very agricultural district, and it was ravaged by Hurricane Michael in 2018. It caused billions of dollars in ag damage, and most of it was to timber. About 83% of the Florida ag losses were timber. You mentioned in your testimony a lot about the Midwest. I'd like to know if you're seeing some issues in the Southeast, in the areas where they're recovering from the 2018 hurricanes, specifically Michael and Florence most overwhelmingly. What issues are you seeing? What advice do you have to offer the producers there? And vitally, what advice do you have to offer to Congress that we can be doing to help?
Certainly the same issues that we'd faced most recently in the Midwest in the way of flooding you've experienced in the Southeast. And the same, again, we don't have the lending, the ability to say yes or no, work out on that loan, but we can encourage those local associations to work with people that have been damaged in the case of Hurricane Michael. And we did. We did put guidelines out to suggest that the associations work with those.
I'm going to suggest loans doesn't really help much on timber. It's much better on annual crops. But if you have a 20-year crop,
yes,
you're wiped out. I mean, so just a thought. I mean, loans help, but they don't make, if you've lost everything.
I can't imagine waiting 50 years or buying an investment 50 years and in a day it is wiped out. We saw a little of that with flooding, with the ravages of the Missouri River, that farms were destroyed from a production standpoint. But yeah, from the timber aspect, I don't know what type of insurance is available.
There's no crop insurance.
No crop insurance.
And nobody's insuring their forest. You can't do it. It's too expensive.
Any degree of disaster insurance that's helped cover that?
Very little. We did some novel things this year in the disaster bill for block grants to help them clean up the timber that's on the ground and replant in a much larger way than ever has happened before. Having said that, you got 3 million acres of timber on the ground, and it's a lot of it's still on the ground. So we're looking for help to get that picked up so we don't have forest fires and beetle infestations.
Well, and particularly if that loan's based on collateral, on the value of that timberland. And
So I'm at the wrong place here. We're talking about grants, not banks.
Oh, yes, right, right. I'm sorry, Congressman, I don't have a solution to it. I can't.
Well, tell us what we should do. Congress, you represent the farmers all the time.
Yes.
But do you have have you ever seen any programs in Congress or seen programs you think Congress should do that could help people who've lost vast amounts of timber? And, a lot of it's family timber plots. You're looking at 100-acre, 200, 300-acre plots. That was their IRA, if you will. And, they've been picking at it for 20 years, 30 years. And all of a sudden, it's gone.
The only thing that I think would possibly have relevance would be some long-term, low-interest loans, SBA. I don't know if FSA has that available to allow to repopulate and allow those timberlands to come back, but it's a long-term solution. And I don't, fortunately, Florida is extremely diversified. So the portfolio in general, I think, is in pretty good shape in those associations due to that diversification. But in those isolated small areas, it's got to be devastating.
Well, you're right, your observation. And I think you're right, by the way, we are diversified. I think there is a lot of good news out there as well. But, we're struggling with this one. And I'm learning a lot about disasters. And along the way, if you have any wisdom you think you could share with me and with some of the other victims like Austin Scott there, Dave Rouser over in North Carolina, Florence got him. We'd be all ears.
Yes.
So thank you very much, Mr. Chairman. I yield back, Chairman Scott.
Sure, thank you. And now I'd like to recognize for 5 minutes our distinguished Congress lady from Virginia, Ms. Spanberger.
Thank you so much, Mr. Chairman. And it's good to see you, Chairman Smith. Good to see you. Thank you for being here with us today before this subcommittee. Last week, the U.S. Trade Representative and the U.S. Department of Agriculture announced that China will lift its ban on the import of U.S. poultry products. This bodes well for the long-term financial security of Central Virginia poultry farmers. Poultry is Virginia's largest agricultural commodity, and the Commonwealth's producers are well positioned to service the expanding market as China accepts our imports. So as poultry producers in Virginia and across the United States look to export their goods to China, what role do you expect that the farm credit system will play in helping them navigate this process and best take advantage of this new business opportunity and market?
Mm-hmm. Well, that's very exciting for the poultry producers. And you'd had, I think, the entire red meat complex, that's one bright spot of possibly filling that void in China's swine herds. I mean, the latest estimate is they're at 50% reduction in their swine production, expected to be 55% by the end of the year. And certainly that demand for protein is a worldwide demand, and to be able to fill that need by direct exports to China is tremendous for our producers here. Hopefully beef can come close to maybe somewhat filling that void as well. The only dark swan and other side of the story, if that African swine flu should happen to spread to this country, the results would be devastating, and it wouldn't affect just the pork industry, but it'd affect your corn producer, your soybean producer, the whole industry wide, if that was to make it to the U.S. So I'm glad for the short-term benefit for the poultry producers. Certainly hope it doesn't get to this country.
And is there, within the farm credit system, is there any role or expected aid that you all can lend, both for those producers who are looking to find these new markets, but also to do so in a safe manner to ensure that, in fact, the concerns you mentioned related to swine flu doesn't flow back to the United States?
Yes, well, and maybe backing up and answer your question as far as what we can do as a system in terms of encouraging those exports. We do have authority under Title III to loan. It does include authority to finance exports. So certainly that's a step in the right direction. As to the African swine flu, it's my understanding that we've expanded on our inspectors at the border. Mm-hmm. Certainly increased scrutiny of products coming from China and those infected countries is measures that need to be undertaken, because there's many different means ranging from feed byproducts to pet food where potentially that virus could be spread. So certainly stepping up efforts from the inspection standpoint and regulations on products coming into this country it would be advisable.
Across Central Virginia, I've had the opportunity to meet with farmers and producers, some of them new to agriculture themselves. And while we're looking at reports that indicate that the current agriculture economy is having a particularly adverse effect on young and beginning producers. At the national level, is the Farm Credit Administration seeing this same trend, some of the challenges facing young farmers looking to get into the agricultural economy? And do you believe the current economy is potentially deterring young people from exploring a future in agriculture? And what are some of the steps or some of the things you would want us to know about what you all are doing, what the Farm Credit Administration sees as the future in this landscape, and what you all are doing to help mitigate some of these economic challenges.
Yes, in our meeting, we talked about that as a priority, and I've mentioned it before here earlier today. It is a priority. It is a need that we focus on young, beginning, and small farmers. And from FCA's standpoint, we've identified that need, and as a regulator, I feel we can exert a strong influence on each of our 68 associations, and are in the process of doing so. Every opportunity I get engage in public, I mention the importance of YBS. Just a week ago, I attended a YBS conference in St. Louis that was hosted by Farm Credit Council and also hosted by local associations. And almost half of the systems associations, 33 out of the 68 associations, was at this conference. And a lot of it was sharing best practices, best ideas, what's working. I mentioned the Dakotas and how the farm credit offices work as clearinghouses for information for different avenues of financing for young farmers. But it was a good learning experience for me. The group that I went with engaged in all the roundtable discussions, the breakouts, and we continue to do that, and we'll continue to exert our influence as a regulator in moving those programs along, ultimately examining each of those associations for effectiveness. Because what program is good unless you eventually evaluate it for effectiveness? And fortunately, with our examination team that makes up a majority of our agency, we're in a position to be able to do that.
Excellent. Thank you so much for your time. Thank you for being here. Thank you for your accessibility for members of Congress. And Chairman Scott, thank you for letting me go over on time. I yield back.
No problem. Thank you. And now I'd like to recognize Mr. Johnson for 5 minutes from South Dakota.
The warmer, balmier Dakota. Since you've impugned North Dakota today, sir. So diversity used to be the hallmark 2 and 3 generations ago of almost any successful ag operation. And then obviously in the last couple of generations, there's been more of a push toward a focus. In the eastern half of South Dakota, that'd be a corn and beans rotation. In the western part of South Dakota, that'd be beef. That doesn't come as any surprise to you. You've seen a certain amount of that in Iowa as well. I get the sense, just anecdotally and talking to my friends in production agriculture, that diversity is coming on strong again. Producers in recent years have, particularly in the livestock arena, got more into swine, more into cattle. You know, first off, sir, Mr. Chairman, have you seen that in the portfolios of those entities you regulate?
Yes, sir, I think we have. And I mentioned being proactive in areas that are having duress, like corn and beans, and part of that is coming up with a plan of diversification, whether it means bringing some other enterprises like livestock into it or working off the farm. And I hate to keep repeating myself on our young, beginning, and small farmers, but again, I'd rather have 10 small loans and 1 large one from a risk orientation, and I think those operations that are diversified in a number of different enterprises or working off the farm from a risk factor are preferable. So yes, sir, I am, and yes, we do encourage that.
And so it seems to me to kind of buy down the risk profile in 2 ways. You know, I mean, number one, it's a hedge against corn and beans, right? If you can't sell for a good price, you can, put it into the animals and try to add some value. Yeah. And then, of course, anytime you've got multiple products coming off the assembly line or off of an ag production, even if you've got 2 different products, if the price for one is high and the other is low, well, that balances out. Are there other aspects that I should keep in mind, either beneficial or detrimental to this push into greater livestock diversification?
Well, I think you shouldn't focus entirely on livestock. because sometimes that involves significant investment and capital. And that's what a lot of young and small producers may not have access to. If I was encouraging your young operators, I would encourage them to put in as many tools in their tool belt they can. If they're a good mechanic, to get a part-time job as a mechanic, and that we need a good dealership close to be able to do that. But it isn't just livestock. It's take your strengths and leverage those strengths to help diversify your operation. And when you speak of diversity, really the system is an example of diversity. Right now, cash grains make up about 16% of our portfolio. Dairy makes up about 7% of our portfolio. Alto, 23% of our portfolio, but that's the strength of the system. It doesn't dominate the whole system, either geographically or from an enterprise standpoint. So to encourage diversification is certainly encouraging risk mitigation.
Yeah, that's a good point. I mean, I was thinking about sort of on-farm diversification. Sure. You're talking about the value of off-farm diversification as well. As I was preparing for the hearing, I mean, a lot of the data that you've spoken about, not a shock to me, right? People who are connected to ag country, I think, know that so much of what you're saying is accurate because they're hearing it elsewhere. Yeah. One thing that was a surprise to me, the memo that staff had put together showed, and I don't expect you to see it from here, Mr. Chairman, but the green bars are on-farm income, yes, and then the tannish beige ones are off-farm income. And I will admit to being a little surprised at how much bigger the off-farm piece of the pie is. Are there I mean, obviously, that's one way to diversify. Are there downsides to having producers that are maybe focusing that much more attention off-farm?
Well, there is, and certainly as you look ahead to concerns and worries about the general economy, that affects the off-farm income component of that. And we've seen that. Associations right now with the general economy going well, and associations that have a high level of part-time farming are doing quite well. 10 years ago, during the financial crisis and housing crisis, it was the opposite. And agriculture tended to carry the risk within the association. So you're very astute on that.
My time has expired. Thank you, Mr. Chairman.
Thank you. And now we'll recognize Mr. Bard from Indiana for 5 minutes.
Thank you, Mr. Chairman, Ranking Member Scott, and Mr. Smith, thank you and all your staff for being here. I represent Indiana's 4th district, which is northwest or west side of the state. And I just couldn't help when my colleague was talking about warm weather. And so if you're planning a trip to bring low-interest loans or loan applications, Indiana is usually warmer than South Dakota.
Okay.
But, you know, you mentioned something else that I found interesting that's I went through the 80s, and you mentioned that, and one of the things, or maybe two of the things, that I think we did much better as a result of going through that, we kept our loan or debt-to-asset ratios less than 36% when we came out of that. I think we try to do that, and I see some agreement there.
Yes.
And I think we placed an increased emphasis on cash flow and financial analysis significantly more than we had done prior to that, maybe. So I thought that was a good thing. And so maybe to help get through the current times, we ought to find some of us old folks that went through that period and we could help out. And then the other area that you mentioned and has been talked about a couple of times, the African swine fever, certainly impactful on the Chinese pork industry. And I think the civilian population needs to be interested and concerned about that because, as you mentioned, pet food or pig's ears or some of those kind of things can bring that virus. It's a virus. It can survive freezing. It doesn't survive cooking. It's not a real danger to humans per se, but it sure could be devastating to the livestock industry. And so I'm finally going to get around to a question here, my colleague. But I am concerned about the credit quality that the portfolio that we're maintaining, Because a lot of times I do think young farmers tend to be in livestock and poultry as another option. So I guess my question really isn't it to you and any of your staff, deals with what is the credit quality for those livestock producers, livestock and poultry, and what's your perception of how they stand?
As far as overall credit quality, and we track it very closely on a quarterly basis, if you were to look at third quarter, we just had information last week in the third quarter, and the percentage of total loans within the system that are non-performing, 90 days overdue, acquired property, a couple other categories in there, is at 0.92%, less than 1%, which in itself doesn't seem alarming given our levels of capital and given our cautious regulatory attitude. What concerns me is in 2018, that number was 0.83. In 2017, that number was 0.67. I call it the creep of deteriorating financial quality. The numbers aren't alarming. We're not at a crisis situation, but it's not improving. As far as the livestock sector, and when you see situations in the poultry where the export markets have opened up, the livestock sector has done pretty well. And one thing that you look at a valuable entry into agriculture a lot of times for that next generation is to put up a poultry building, hog building with a contract that pays for that building in 10 years. And I had posed the question to staff because I know in my home area that vertical integrated enterprise is very important and that Farm Credit finances a lot of those buildings. But what would be the situation if the African swine flu were to reach our shores and those buildings, what type of allegiance does that contractor has to that farmer if they should contract it? I don't know. It's a good question, but it's certainly a cautionary statement to make out there on it. But as a general rule, livestock has performed pretty well in the whole portfolio.
Thank you. My time's up. I yield back.
Thank you very much, Mr. Bard. And now, as we approach the closing, you've been very informative. I'd like to recognize our ranking member, Mr. Scott, for any closing comments he'd like to have.
Gentlemen, I'm going to make a brief closing comment, and then I have another appointment, and we'll slip out. But first, I want to thank you for being here and what you do for rural America. Second, I want to reiterate a comment that I think Ms. Craig was trying to hit on with regard to the cost of health care in rural America. As someone who represents 24 counties, and over half the counties that I represent, there's only one health insurance carrier available. In many cases, they don't have contracts with the providers. And while insurance carriers cannot underwrite the individual citizen, they can underwrite a zip code. And I'm not sure that discrimination against rural America is necessarily the right term at this stage, but in large parts of rural America, we don't have access to health insurance because carriers have, for some reason or the other, found a way not to underwrite in those zip codes. And so as we talk about how we get young people back to the farm and we talk about the cash flow of the farm, the truth is it's the cash flow of the farm family. And so if farm families are forced to pay thousands of dollars a month more for health insurance because they don't have competition in their markets for that product, then obviously that drives people into other areas. Many of the farmers in my area, their spouses now work for a school system or some other entity where they can actually, that's the only access they have to health insurance, which is something that that I think is important to keep in mind with rural America. Because if we're going to have farmers, then the farm family, not just the farm, has to be able to cash flow. And so I want to thank you for what you do. You play an important role in it. I think we've got some bumps ahead, hopefully not too bad. Hopefully we'll learn from them, and hopefully we'll find ways in the next Farm Bill through crop insurance and lending in other areas to actually reduce the risk of being in farming and hopefully allow our farmers find ways to increase that revenue. So thank you for what you do. And Mr. Chairman, as always, a pleasure to see you and look forward to working with you.
Thank you, Mr. Scott. Chairman Smith, thank you. You have indeed opened our eyes to much of what we were only dimly aware. And I thank you for that. And I want you to know that, as you could see from the committee on both sides of the aisle, we're very concerned about improving the credit status of our farmers. And I would hope that you would look to our committee as your spear to make sure that we in Congress are doing everything we can. And when I say at the point of the spear, I mean that, because this is the subcommittee for agriculture dealing with credit. We, as I guess, as Doc Holliday said at the gunfight at OK Corral, he said when he looked at the bad guys, he said, "I'm your huckleberry." So look to us as that. Now, I just want to ask you a series of questions. First of all, are you getting the budget from us that you need to do the job?
Yes, Chairman. What we have requested and the current needs that we see as far as our labor force, we're a fiery institution, so we feel we have a great pool of very talented people that work for FCA. Certainly as people in my age group, two of these gentlemen here at the table are new to our senior management team as of the last year, so retirements can be a challenge. And our examination force makes up 55% of our total workforce. And we'd mentioned in our previous conversations that we interview at 30 different colleges and universities, many of them land-grant universities. Mm-hmm. And we talked about the importance of that, the importance of diversity. With that, I believe, yes, we do have the resources, but if we see continued deterioration, we need to see a continued involvement of FCA in what's going on out there. We appreciate the opportunity to expand on that at some point.
Yes, please let us know. And as you know, you mentioned the land-grant colleges and universities. That's one of the areas that we have expanded on. And with the last Farm Bill, we were able to get $80 million put in there for scholarships and movement. And we want that to grow, and we want it to be permanent. Secretary Perdue and I work very closely on that, as you know, and the Agriculture Department. That will start in 2020. And finally, our job is to really get funding out. And I want to ask you to give us your opinion on Congress's performance given the emergency funding process. I really want you to give us some answer to what did we do? What did we do to contribute to the additional hardship of our farmers by dragging our feet up here and not getting the emergency funding down to our farmers in time. What role did that play in our farmers not having the capital to succeed? What role did that play, as you and I talked about, the mental anguish of not getting? You see, I know that several of those suicides were done, they had nothing. And then the storms came. They're going to come again. Yes. We don't know. We have not done what we should be doing in getting the professionals, the scientists, the people who have the information of what's going on. And so I'd love for you to just give me your opinion on how devastating an impact we had in not getting this aid to our farmers in time as a result of these series of hurricanes.
Well, Chairman, you know, disaster situations like that with farmers that are in a bad position anyway just exponentially catapults it. Mm-hmm. And certainly every day that that's delayed gets closer to that operation failing, which nobody wants. I mentioned that we try to be proactive in working with our borrowers. We send out guidelines to the associations to be proactive, to enlist the help of additional loan staff, financial staff to help these farmers with plans to get over these deficiencies, but the clock's ticking.
Yeah.
And a lot of times that interest bill continues to tick. So certainly it's a bad situation, and it's a bad situation on top of a situation that may not be that stable anyway.
Yeah. Well, several of us are very determined that that never happens again.
Yes.
And that's we need to, as members of Congress, know what we are doing to not only help the problem, but are the things that we're doing and not doing that exasperate it as well. And that was one of them, and we hope it doesn't happen again. Well, we got your marching orders on what we need to do most, and as I understand it, it is get these trade deals moving, particularly UMCA and the China trade. And Mr. David Graham spoke eloquently of the interest rates, and we'll see what we can do up on that. And I think somebody also mentioned the fragile land values.
Yes.
I don't know what we can do about that one, but we can certainly do all we can. But you got my commitment as chairman of this committee, and I think I speak for all of us, that we will use every energy we got to get these trade deals moving, because that is something that's in our ballpark. We'll do it. With that, I believe now I am to, thank you, my dear, Miss Ashley Smith, who is, I would say, give her a hand. She is my longtime partner, and as we know, with child, and I'm doing all I can to get her home. But she won't. She's so dedicated to her work. So thank you, Ashley. Under the rules of the committee, the record of today's hearing will remain open for 10 calendar days to receive additional material and supplementary written responses from the witnesses to any questions posed by a member. This hearing of the Subcommittee on Commodities, Changes, Energy, and Credit is adjourned. Thank you all.